So the markets just pulled off something that felt almost too calm. Stocks rallied higher today, brushing up against fresh record highs yet again. This is even as Wall Street stays gridlocked, even as global trade tension still exists, it brews beneath the surface, and these investors continue to shrug it all off like nothing matters. But the reason they're shrugging it all off might surprise you. So we're about to get into the market's performance today and talk about all of the news that happened. But you'll see today we got one chart, and one chart is all we need to see because this same chart is what most of them looked like today. So the Dow climbed 1.1%, the S&P 500 added about the same, the Nasdaq jumped 1.4%, leaving all three major indexes less than 0.3% from all-time highs. And the main push, there was a lot of push in the upward direction today. The first being Apple and the news regarding that, because Apple was a big driver today. We've seen it soaring nearly 4% to its first record close since last December. This was on strong iPhone sales, and that helped push Apple's market cap to $3.89 trillion, making it the second largest U.S. company, right behind NVIDIA, right in front of Microsoft. And these companies always switch places, but Apple just had to come back and remind everybody it's still one of the big dogs. And with nearly a fifth of the S&P 500 companies reporting earnings this week, it's believed that investors are positioning for some type of upside because they don't see the narrative to be so negative, rather a lot of positivity coming out of these earnings, and they don't want to be left underexposed if these results do say come in a little hot and boost these stock prices. But maybe some of the bigger story that we've seen today, because it wasn't just all Apple, it came from a geopolitical front. So President Trump came out and said he'll meet with China's President Xi Jinping pretty soon, predicting that it will be this fantastic trade deal and that it could be right down the horizon, right down the street from where we are today. He really downplayed Beijing's recent restrictions on rare earth exports, saying that China isn't threatening too much right now, and added he has something more powerful than rare earths, which are tariffs that he could use if China doesn't want to play fair. And despite the usual tough tone, markets heard something new today from Trump, a willingness to talk and at least kind of try to be level-headed about the deal rather than we're sending tariffs to 1,000%. And that was enough to inject a lot of optimism back into the risk assets we've seen today, and the move really showed for itself. And then adding even more fuel to the rally, we got comments from the White House today. The National Economic Council Director Kevin Hassett came out and he told us something, that there's now this real shot that the government shutdown could potentially end this week. We don't know for sure, but he pointed to momentum in the Senate after the weekend's No Kings rallies, suggesting moderates may finally push through some type of deal. Maybe there could be some type of agreement made. And if not, he hinted at stronger measures to reopen the government down the road if they needed that. Now, that optimism gave traders another reason to buy the dippity-doo law, if if you'd even refer to it as that, because it's just been straight up ever since Liberation Day. So, I mean, y'all, what the heck is next? Because markets are now fixated on three major catalysts. We got ongoing trade talks, we got the potential reopening of the government, and coming this Friday, despite all the earnings reports, this Friday could be a kicker because we could get the inflation report. Who knows if we get it or not? Seems like it's pretty certain at this point, but the September CPI, which could show whether price pressures are still cooling or what's going on with those whereabouts. And then all eyes are going to turn to October 29th. Give us the drum roll. The Fed. So their October 29th interest rate decision, where they're widely expected to deliver this 25 basis point rate cut. Looks like 99.4% of a 0.25% cut. So 0.25% is 25 basis points. Fed officials have made it pretty clear that they're walking this fine line and supporting growth without reigniting inflation is their goal. But if inflation continues to drift lower while global talks stabilize, that could create the perfect recipe for another leg higher in the stock market. But if these tensions continue to really flare up and get worse than where we were, that the calm above might not last, that we've kind of gotten accustomed to this taco. I love burritos more. But we'll be watching how these stories develop, because right now the market looks calm on the surface. There's still a fire still burning underneath it. It's like a pot of stew getting cooked up, and we just wonder when dinner is going to get served, everybody. So later video today, not a lot of news. I've just been kind of... Really, I was going to take today off. I got today and tomorrow off, but I miss y'all too much, so here I am. So I hope your day was awesome. I hope your night is awesome. I hope tomorrow is awesome for you. I hope you come back to watch another one with me, and have a good one.